Hello, my name is Jason Bowman from taxmarketinghq.com, and welcome to this February 2015 continuing education program. This is a compilation of updates and regulatory changes and information about some IRS restructuring that directly impacts how we resolve collections cases with the service and how we're going to engage with the service, and also introduce some challenges and hopefully fix some challenges that have existed in the past. A big chunk of what we're going to be talking about today centers around some policy shifts within appeals in particular, and also the thing that I'll probably be spending the most time on and that I'll be starting with, which is the expansion of the available mediation programs. Particularly, I'll be talking about fast-track mediation for resolving collections issues. So this is an IRS-approved continuing education program. If you did not submit your PTIN when you registered, please be sure to send that to me so that I can properly report this to the IRS for you. For those folks that are watching this recording after the live webinar, please note that I can only provide continuing education credit for those that were here live attending the webinar. So our course objectives for this morning, we're going to take a look at the expansion of the mediation program, talk about those policy shifts over in appeals, take a brief look at the small business self-employed divisions, some internal issues going over there, some personnel shifts that are being made in collections in particular. We'll also discuss the new 656B booklet, which contains the new 433A and B for OICs, and also cover some of the new OIC rules and regulatory changes, some of them that aren't necessarily new, a couple things that have been made permanent, that were made temporary back in 2012, etc. But like I said, the majority of what we'll be talking about is on the mediation shifts. If you're not familiar with the IRS mediation program, this actually started, I believe it actually started in 02 or 03, but it's always been kind of a in a pilot program status. And when it first started, it covered a very narrow range of issues, and then has gradually expanded. When I got into the tax resolution space in 2008, they had just introduced the program at the very end of 2008, actually, into covering collections matters. And at the time, when they introduced it for collections matters, it was limited to a couple of situations only, and it was only available at 2 appeals offices in the entire country. There's one appeals office in Texas, I believe it was. I don't remember where the other one was when they first launched it for collections. But now, over the past several years, they have seen the success of the mediation program in resolving taxpayer disputes, and how it saves the service money by avoiding going to court. And it's important to recognize that, and we'll talk significantly more about this when I get to the section about the policy changes over in appeals. But it's important to always remember that appeals is considered, yeah, it's part of the Treasury Department, but it's an arm of the IRS that is supposed to stand alone and distinct, just like the Taxpayer Advocate Office does. And the policy shifts that we'll be talking about are to extend that arm's reach separation between SBSE and appeals in particular. And so as part of this program of appeals kind of trying to entrench their difference and separation from the rest of the service, they now have at every single appeals office across the country, they have at least one person that has been trained in alternative dispute resolution. That's what ADR stands for. So more and more appeals officers being trained in mediation tactics. Now, of particular importance to us, when we're talking about tax resolution, because there are mediation programs, they exist for multiple functions, including examination and including collection. But the fast track mediation program for collections, I think, is the one that is most, of most interest to us. The revenue procedure that came out at the very end of 2014 that is of particular interest to us, that it covers the expansion of this program in particular. If you want this for reference, it's Revenue Procedure 14-63. So what exactly is fast track mediation? It's important to understand what mediation is and what it is not. Mediation is not intended to supersede or step around or even provide an alternative to the standard appeals programs. It is not a substitute for a collections due process appeal. It is not a substitute for the collection appeal program. It is not a substitute for the regular offer and compromise denial appeal. It is not a substitute for the regular appeals rights that a taxpayer has in conjunction with a trust fund recovery penalty proposal, the Form 1153, proposing the assessment of the trust fund recovery penalty. It is not a substitute for any of those normal appeals programs. Rather, mediation is a program, it's handled by appeals, but it is meant to resolve issues where there either are no appeals rights that are outstanding, so perhaps the taxpayer has exhausted their appeals rights, or for issues between the service and the taxpayer that are outside the scope of a normal appeals process. So when you're looking at whether or not to get involved in mediation, there's some things you want to consider. So if there are appeals rights outstanding, the service is going to reject your application for mediation. Okay, that's pretty much automatic. You also need to balance the risks and costs of litigation against mediation. And the service, along with IRS Chief Counsel, they're going to be making this exact same type of decision. It's part of their process to accept a mediation position or not. And there may be cases where the service, in order to make a point, if they're trying to create case law, for example, for some reason, then they would choose to litigate that instead of taking it to mediation. Mediation is non-binding. So unlike let's say, for example, a collections due process appeal, like we talked about in last month's webinar extensively, the decision made by a settlement officer is binding, whereas in mediation exists to bring two parties together to resolve a dispute over a factual matter, and usually in our case it's going to be between a taxpayer and a revenue officer, and to hash out those differences of opinion, on the issue at stake. The suggestions delivered by the appeals person that's mediating this process is non-binding. Okay, so this is something very important to consider before leading into mediation. There's also there's a ton of things that cannot be mediated, and the laundry list is quite extensive. This list is repeated in Revenue Procedure 1463, and it's also discussed extensively in Revenue Procedure 2003-41, which was the revenue procedure that really clarified a lot of the procedural issues for fast-track mediation before it started to expand. So things that cannot be mediated. I already mentioned that if there's appeals rights outstanding, then those cases cannot be mediated. So CDPs, CAP, Collection Appeals Program matters, those can't be mediated. Also, the case needs to be assigned to the collection field function in order to be eligible for mediation. So it has to be in the hands of a revenue officer. If it is assigned to a ACS support center, such as Ogden or Fresno or Memphis, then the cases are not eligible for mediation. Frivolous issues, frivolous tax matters that we're all familiar with, these particular objections cannot be mediated. And I'm sure you're familiar with most of the situations that, there's con artists out there that sell programs about how to get out of paying your taxes, and these are a lot of the frivolous issues that they raise. So things like the misinterpretation of the Internal Revenue Code over whether or not there's an actual legal obligation to pay tax, the argument about forms lacking an OMB control number not being official and usable. There's the whole argument over the income tax amendment to the Constitution and Ohio's ratification or not thereof. That's a frivolous position. There's another one, and I wasn't even aware of this one until I was researching for the slides, but the argument that only interstate commerce transactions under the Interstate Commerce Clause of the Constitution, only those are taxable by the federal government. Apparently that's an argument that a number of people have tried to make. There are First Amendment religious objections to taxation that people raise, 13th Amendment arguments regarding taxation as slavery. That argument has not held up. So any of these frivolous positions, mediation is not the place for them. As I already indicated, it must be in the collection field function, which is a division of the Small Business and Self-Employed Unit. So SBSE must have jurisdiction over the case. The cases where litigation's already been filed obviously cannot be mediated. So if it's docketed in any court, be that tax court or district court, appellate court, doesn't matter, docketed cases cannot be mediated. If there are items that are up for discussion in the mediation that you're trying to resolve, where there is a difference of court opinion, say for example between Ninth Circuit and Fifth Circuit, if those two circuit courts, those appeals courts reach different decisions on the same matter, then that can't be mediated because the service doesn't have a solid basis for treating those cases. Also, any issues where that have not in the past ever found themselves in court. I think it would be hard to find an issue these days that has not already been through the court process. But if one does come up, then and there's no existing court precedent, no case law regarding that particular type of issue, then that also cannot go to mediation. Cases that involve issues surrounding a change in accounting method are explicitly prohibited from going to mediation. And also, and this is kind of an interesting one, because we know working with tax debtors that sometimes the most complex part of a tax resolution case is simply getting the taxpayer to provide us with information. To file returns, to make federal tax deposits. If that's the situation, then the appeals is not going to accept the mediation application. And in fact, there can be cases where, in the case of an uncooperative taxpayer filing an application for mediation where the appeals or collections has stated and appeals has agreed that it is simply an intentional action to delay collection, even though there are no, there's no protections against like levies and whatnot when you're in mediation, but they have said that some of those actions can be simply to delay collections, and those will get thrown out of the mediation process. So what can be mediated? The vast majority of the bread and butter situations that we work with in the tax resolution sphere can go through mediation. Example, offer and compromise matters. In particular, asset valuation disagreements or calculation disagreements, or the applicability or the allowance of a particular living expense that somebody's trying to claim. Those are all factual matters that can be mediated. Trust fund recovery penalty issues. These are pretty common, especially disagreements from the 4180 interview process and the trust fund recovery penalty assessment process. If you have an argument that the process was not completed properly, so a policy procedural dispute, then that's usually going to be taken up in a standard trust fund recovery penalty assessment appeal. But if appeals either didn't resolve it to your satisfaction, or if it's an issue that's outside the scope of an appeal, for example, with the 4180 interview itself, then that is something that we brought to mediation. This is a particularly helpful tool, mediation is, when you are disputing a trust fund recovery penalty assessment on the grounds that the 4180 interview did not properly address the willful or responsible issue. Okay, in order for the trust fund recovery penalty to be assessed, an individual must be found both willful and responsible for failing to pay over the taxes. And there are a significant number of cases where revenue officers did not properly evaluate the individual situation in the 4180 interview, and in making that determination, And you can raise factual issues regarding the whole willful and responsible elements that come out of the 4180 interview. So that's a huge area of mediation in particular that you should kind of keep in the back of your brain when dealing with 4180 interviews at those times. Then there are also CDP matters. If you feel that the resolution, even if it comes out of appeals, the determination made by appeals on a CDP hearing, if you feel that there's something that appeals failed to take into consideration, something that they did not give sufficient weight to in their decision, if there are factual matters that did not arise during the CDP hearing and you've already exhausted your appeals rights, but you want to bring up that new information, then mediation is a place in which you can do that. So here's what the mediation application process looks like. There's a form for it, just like there is for most things. So form 13369, agreement to mediate. With this form, you'll need to submit a written explanation for what your grounds are, your factual grounds are for requesting mediation. You'll need to prepare any documentation. And again, this goes back to it needs to be within the jurisdiction of SBSE. So you take this package and it gets submitted to the revenue officer just like an appeals, an application for an appeals hearing is. And then the RO forwards this to appeals, and the application for mediation has to be reviewed and approved specifically by an appeals manager. So the process here, and this is a list of questions directly from the IRS website, actually, on mediation, but I thought it was important to include this because it provides us a lot of jumping off discussion points for the mediation process. So a bunch of things to consider. As you think back on the facts of the dispute, the situation that arose, what is the core of the matter for you? So the taxpayer and you as the representative should be able to very, very clearly articulate what the core of the matter is. For example, the valuation of a particular asset is incorrect. So when an offer and compromise application was submitted and the offer examiner rejected the offer based on the AET valuation for your house, for example. They're questioning that, and then you went to appeals, and appeals said, agreed with the offer examiner. Well, then you can take to mediation the whole thing in order to argue your case again about the value of your house. Because we're taking the equity of the house into consideration for the offer application. So always know very, very clearly what the core of the matter is. Number two, how do you think of the facts, circumstances, and events that gave rise to the dispute look to the other party? What would you likely do if you were in their shoes, and what might help you understand their perspective better? So basically what they're saying is always look at this from the other side's perspective. When you're preparing your written application for mediation, consider why the IRS took the position that they did. So for the house example, is there a particular reason why the value of the house was questioned? And you need to take that into consideration. What sales comparables was the offer examiner using? Were they using market comparables, or were they basing it on county assessor data? So that's something to take into consideration because it will help you prepare a better argument. Factors beyond the control of either parties that contributed to the dispute. A lot of these kind of situations arise in natural disaster areas. where there are disputes that arise with the IRS over the inability to file a completely accurate return because of destroyed records, because of flooding and fires. So consider those factors beyond the control of either party that are at the core of the dispute. These can particularly arise in penalty abatement issues and in trust fund recovery penalty issues. What might you do differently if you had the opportunity to start over? What would it be like to have this dispute over? Think about what you could have done differently at the start of the situation in order to either better document your position or to prevent the situation from arising in the first place. For example, in this day and age with cloud storage, there's a reasonable expectation that you will have off-site copies of accounting records. Okay, that is a realistic expectation in this day and age. What would it be like to have the case proceed to litigation and end unfavorably? Again, don't forget that the entire mission of appeals, their entire purpose, is to avoid litigation. That is basically their mission statement. Litigation is also costly from the taxpayer's side. It's lengthy, it's embroiling, it's not fun, and so they need to take that into consideration as well. And then also you need to know what you want out of the other side. So what does a fair resolution of the dispute look like to you? For the asset valuation example I was talking about a second ago, what do you want the IRS to view as the fair value of your house? And when you look at these 7 questions, it gives you basically a template, a checklist for going through and making your case, right? So, it can help you determine what records you're going to need, how you're going to need to back it up, what you're calling out the IRS on as their fault for not taking things into consideration in earlier processes. So I think this is a really handy checklist to have when you're creating your written statement on your application in particular. So let's talk about what happens during mediation. During a mediation process, appeals does not retain jurisdiction of the case, all right? And this is important because none of the normal protections that you get when a case flips over to appeals comes into account. So there is no stay of enforcement. There's no stay of proposed levy action. The collection statute keeps on ticking. None of those freezes that you might normally expect when appeals is involved come into play here. So the case remains in the jurisdiction of the revenue officer, basically. What happens next is that the SBSE division prepares their summary of the issues. Again, this is done usually by the revenue officer. Then the hearing actually comes around, and it functions largely in the format and function of a CDP hearing. Okay, the format is very much the same. The difference is that the revenue officer will actually be on the phone or in the office if you're doing it in person. And whereas in a CDP or equivalent hearing or a CAP hearing, it's just you and the appeals officer. Well, in this case, all the parties get together and present their case. If it is a offer in compromise situation where the total of the tax penalties and interest exceeds $50,000, you're also going to have a 4th person on the phone or in the room. That's going to be a lawyer from the IRS. Obviously, a taxpayer can have representation and should in these cases. This is not something a taxpayer, in my opinion, should ever do by themselves, just because of the complexity of the issues at stake. Also, it's important to, and again, I've said this several times already, but appeals is just there to facilitate. Appeals is not there to make decisions. And anything that appeals says or recommends is not binding on either party. So the mediation process, if you're confused at all about where this helps you, one of the things that you may have experienced in your tax resolution representation career is situations where you're constantly just butting heads with a revenue officer over a particular issue. Well, mediation is a great place to have a constructive conversation in that situation, especially when you can't come to any agreement with a group manager, the revenue officer's manager. And so factual matters that you're just constantly butting heads with the revenue officer over, mediation is a great place to take that, okay? And keep in mind, there's no cost to mediation. There's no, there's no application fee. There's no additional cost for using this as a resolution pathway. So have this in your arsenal. So we've all dealt with unreasonable or non-communicative or revenue officers that just won't listen. We've all dealt with them. Mediation is a place to take those kinds of disputes. But ultimately, appeals is there simply to mediate. Ultimately, the taxpayer and SBSE have to come to a mutual agreement on the issue. Before I get into talking about specific SBSE issues, there are a couple of things from the revenue procedure in particular that I wanted to mention to you. And this is part of the new changes to mediation. So aside from just the geographic expansion to the entire country and every appeals office, having somebody available to do these on site or over the telephone, the new revenue procedure included some additional guidance that are important to address. A big one was that coordinated issues, which used to not be eligible for mediation, certain compliance coordinated issues or appeals coordinated issues are now eligible for mediation. But the caveat is that these issues are not eligible for the mediation process if the taxpayer or his or her representative has previously declined the opportunity to discuss the coordinated issue with the appeals coordinated issue coordinator. That is a mouthful. So appeals has a coordinated issue coordinator that the taxpayer has to discuss the matter with first before those can be eligible for mediation. Issues for which a request for competent authority assistance has not yet been filed. When a taxpayer is entering into a settlement situation with appeals, be it through a CDP, an equivalent hearing, a cap hearing, or mediation, the taxpayer can then request a competent authority assistance, and if they do that, there are some issues that come up that can directly affect the mediation outcome. Okay, so keep aware of that. Other issues. Oh, this is I guess this has become an issue in mediation, but they call them whipsaw issues. And this is a case where resolution of an issue between the IRS and one party, but in the absence of a third party participating, would have some kind of effect on the third party. They're not fast tracking these mediation cases. And a most common example of that is a joint tax liability, and one spouse is filing a innocent or injured spouse claim, and both spouses refuse one spouse refuses to participate in the mediation process, then that's going to derail the entire mediation process as a whole. So those are some issues. Most common issues, again, that come up that are eligible for mediation on the offer and compromise side, the value of assets. And the IRS has, and we'll talk about this in a second, they've expanded the scope of asset cases that can be handled by mediation, as well as the calculation of future income. The future income, remaining income multiplier that's used in the RCP calculations, that's a pretty big one that can come up and can be brought to mediation. So the scope of those cases that mediation is allowed to consider, I'm not going to go through and read this entire half page worth, but the scope of those particular issues that can be addressed in mediation has been expanded, which is a good thing. So the mediation process, I think, is going to become a greater and greater tool in your arsenal. It is something that most of us, myself included, have very little actual experience with. I've only had a couple of cases go to mediation out of the hundreds and hundreds of cases I've worked on, and it's the same for most of us that are in the tax resolution world. Is mediation's this thing that's been out there for a number of years now, but we've never felt the need to resort to it as much. And the reason is because that there have been other pathways, like within appeals in particular, where we were able to get things done, or we took cases to the taxpayer advocate where we were able to get things resolved. Well, because both appeals and taxpayer advocate, and now even SBSE, are making policy changes that restrict the scope of their operations and the cases that they'll consider, the mediation process is something that we're going to be using more and more of. So what I've given you here in the past half hour is really just a really big picture overview of mediation. I would encourage you to read publication 3605, which is just a one-page publication on mediation. Read Revenue Procedure 2003-41, which is the original revenue procedure for it, and then read the one that just came out in December, Revenue Procedure 14-63, to get more in-depth information on some of the specifics that are that I can't cover in just a 1 hour presentation here. So I hope that this was a good overview of the mediation process for you. Look to it. Like I said, I think it's something more and more of us are going to be relying on in the future. All right, let's change gears a little bit. The rest of this will go through pretty quickly, but there are some SBSE issues that you need to be aware of that are going on here in 2015. First of all, we all know the IRS budget for this fiscal year is about, I think it's close to $2 billion less than what the commissioner requested. And this is being felt at all levels. You know, I'm presenting this during the middle of tax season, and it's all over the media right now. The lengthy wait times on the telephone in particular, because the IRS has had to cut service hours in order to avoid paying overtime because they don't have the budget for it. So that in particular is affecting folks. and they call the 800, 829, 1040 number. But we're also seeing that directly impacted across other units, in particular, collection field function. The hiring freeze within SBSE, it has directly impacted the customer service levels and the case inventories of individual revenue officers are skyrocketing right now because of the fact that they are adjusting their budget through normal attrition. So in other words, people that retire or quit and go, get their enrolled agent license and go to practice in the private sector. They are not hiring new field personnel to replace those losses just because they don't have the budget for it. Same thing's going on in ACS as is going on in the 829 1040 number. ACS hold times are getting longer because of overtime restrictions and the hiring freeze. Because of these issues, over the past couple of years and past 6 months in particular, both appeals and the Taxpayer Advocate's Office are really enforcing their caseload restrictions. Appeals in particular used to not be as much of a stickler on the cases that they would take, but they are doing so now because they have to balance their own caseloads given their limited resources. SBSE is also in the middle of a restructuring. They're doing a significant top-down organizational restructuring. They're shifting a lot of personnel around. You may be involved in a situation right now where a revenue officer that was working on a case for you has just been randomly reassigned to another city or to a management position or they retired and weren't replaced. We're seeing more and more of this. And so this whole process is both a blessing and a hindrance, okay? Some of the blessings, I guess. Cases that are really straightforward, installment agreement, or even non-collectible cases, they should be easier to resolve with revenue officers because they are motivated to get that case out of their inventory. The challenge with this actually becomes on the client side. You're going to need to become better with your clients about enforcing your own deadlines for receipt of information and getting into compliance. It used to be that you could string along with a 941 case, for example, for 1 or 2 quarters, and feed the IRS a little bit of information here and there, request additional delays of enforcement to work with your client. Those days, unfortunately, I think are gone because the revenue officers are under greater pressure to move paper. If for them, if moving paper, creating action on their cases, there's only 2 ways that they can do this, and never forget this. It's either with the taxpayer's cooperation or against the taxpayer's cooperation. Don't be surprised if revenue officers start getting a little bit more trigger happy in terms of releasing levies, or of issuing levies, sorry. So if there's a delay in movement towards compliance, expect less leeway from the revenue officers in terms of the time periods that they will give you for delaying collections action, and expect them to be quicker to levy than they have been in the past several years. But at the same time, revenue officers are looking for excuses to get rid of cases, okay? If you have a very straightforward installment agreement situation, which the majority of cases are, then don't delay on proposing the installment agreement and getting it enacted. this is going to require you to have a faster turn time from your client and in your own office for preparing the 433s and getting tax returns prepared so that the case can proceed. Okay, so it is shortening the case cycle for those cases that are pretty straightforward, which is actually the majority of them. Okay, like I said, ROs are also going to be looking for excuses to get rid of cases, and so oftentimes simply to get it out of their inventory, they will welcome your CDP or offer and compromise application, because then the case falls under the jurisdiction of a different unit, and they will happily send that on. Whereas in the past, they would be a lot more hesitant and try talking you out of filing your CDP. Okay, I don't think you're going to see much of that anymore as they try to reduce their own case inventory. The downside is primarily due to the staffing issue. Complex cases with complex issues are going to take even longer and be much more difficult to resolve with collections, and this is one of the reasons, probably the biggest reason, why you're going to see greater and greater use of the mediation process. Let's talk about appeals reorganization real quick. The formal term for the appeals reorganization and policy changes is AJAC, the Appeals Judicial Approach and Culture Project. This was an appeals improvement project started in 2012, and the goal of the project is to further distance appeals from other IRS departments. They're trying to flex their muscle, so to speak, to increase both their actual and perceived independence. And in the revenue procedures, they're spelling this out. Appeals actually said that. They actually said that increasing the public perception of their independence is a stated objective, because perception is reality. As mentioned earlier, don't forget that appeals, their job is to avoid litigation, okay? So as such, part of their mission is to own the process of dispute resolution. And all the policy changes that you see appeals making over the past few years, and in particular in fiscal year 13, and then in the summer of 2014, July, August, you saw a lot of changes. It's to emphasize what they do and don't do, okay? It used to be in the past that with a CDP appeal or a CAP appeal, the appeals personnel would happily take on an investigatory approach to working with you in your client, but they will no longer do that. They are flat out saying, we are not in the business of assessing taxes. We don't investigate information. We don't examine. Their sole task is dispute resolution. So everything that they're doing is to emphasize that. So in fiscal year 13, some specific things, they clarified that appeals officers cannot take that investigatory approach to offer and compromise appeals in particular. They now pretty much have to take collections and the taxpayer's word on most matters, and they will not actively seek out changes in asset valuations or income and expense items. They will not be looking for IET or AET changes that they can make, for example. They will not be looking for changes or improvements that they can make on a 433 on the living expenses side, for example. So if you miss something in there, don't expect appeals to find it for you, which a couple of years ago they probably would have. Okay, but now they're not going to take on that kind of of a liability, basically. So they're not going to change valuations and expense numbers, etc., but they can consider documentations that you provide for those changes. In fiscal year 14, appeals will no longer raise any new issues in hearings, whereas they used to look for things and bring them up. They're not going to do that anymore. They will, however, retain and resolve what are considered underdeveloped cases, which are often cases that do not have full financial documentation or that are missing something. New offers and compromise submitted within appeals are now reviewed not by appeals, but by the offer and compromise centers. But the case remains in appeals jurisdiction. If you submit a 433 A or B within an appeals offer situation, the 433 is going to be sent for review at the OIC center, not by appeals. That's how they're taking that no investigatory stance. Outside of a collections due process appeal, offer and compromise rejections in appeals will no longer automatically incur a collection alternative, meaning that if an offer and compromise is rejected in appeals, it's rejected in appeals and it's gone. The appeals will no longer come proactively say, hey, why don't you do an installment agreement of this amount? They are not going to do that anymore. In installment agreement and non-collectible status 53 cases, determination of whether or not a notice of federal tax lien should be recorded will not be made by appeals. Okay, so appeals is not going to file a tax lien. All right, whereas in the past they used to make that determination. So this is, as you can see, these kind of changes are all just them embracing their one job. And you're seeing this happening service-wide. The big picture is appeals does not want to be the first finder of fact. They are here for dispute resolution. They are not here to investigate or examine. The even bigger picture is basically appeals sending a message to the collection field function to deliver only fully developed cases for consideration in appeals. And the way I boiled this down was appeals is telling collections to do their job. And again, you're seeing this message being communicated across pretty much all Treasury departments. Real quick, let's talk about the Offer and Compromise Program. In January 2015, there was a brand new update to the 656 booklet that was introduced. And some of the things that we're seeing are some simplifications to the OIC program, some expansion of eligibility for offers and compromise, and then the early last year, about a year ago, the creation, again, a mediation process, but a post-appeals denial mediation process. As you're probably aware, we're now down from 3 down to only 2 payment options on the offer and compromise. There's the lump sum cash offer that requires 20% down and the balance paid within 5 months of acceptance. Then the other one is the periodic payment offer, which requires monthly payments during the offer evaluation and has a maximum term of 24 months. The other old payment option for offers and compromise that allowed you to pay up through the 5-year period, that's gone. Within RCP calculation, some important changes. Most of these were actually changed in 2012, but a couple of them now made permanent. So if you're wondering whether these, the 48-month multiplier on remaining income is gone. The lump sum cash offer remaining income multiplier used to be 24, it's now 12. That drastically expands the eligibility criteria for people to be able to file an offer. On the periodic payment offer, the multiplier used to be 60, then it went down to 48, and now it's down to 24. And that's not expected to increase anytime soon. That's been embraced under the Fresh Start initiative. So it's on purpose by the IRS to make more people eligible. things that used to not be eligible for inclusion on the 433 when making the RCP calculations, but now you can include minimum credit card payments, delinquent state and local taxes, and student loan payments. Those were temporary changes in 2012, but they are now permanent. And then also the allowable living expenses have been expanded a little bit too. So when you look at the national standards, the current update to the national standards, you're going to see some better numbers. RCP calculation. This is a pretty big change actually for a lot of taxpayers. But the 80% valuation discount. So it used to be that the IRS would take the quick sale value of an asset, so a car or anything else, multiply it by 0.8 to arrive at the asset valuation discount, but it only applied to physical assets. Well, now they're accepting the fact that if you sell investment accounts, stocks and bonds and other things, and you get rid of them rapidly, you're going to take a hit. So they're now extending this fair market valuation discount to investment accounts, which is huge for certain taxpayers. The application fee went up to $186. And also the way that they handle joint liabilities is changing a little bit. It used to be that you could file, you could file one offer in compromise for two taxpayers that were divorced, where there were both joint and several liabilities. You could do that on one offer. Now they're being a stickler about enforcing this provision for two separate offers in compromise. So if there's a joint liability from an MFJ return, the joint liabilities, even if they're now divorced, the joint liabilities on one offer, the separate liabilities are on a completely separate offer application. Each application is distinct. They're processed separately. They're handled separately. They require their own payments, their own application fees, and they're handled completely separately. So in conclusion, I know I'm a few minutes over, so my apologies for running late on this. But in conclusion, you're going to be making use of this mediation process. I think we're all going to be pretty much required to use it as collections is more and more difficult to resolve certain issues with in the field. And so we're going to need to be involved in the mediation process more so in the future. Always, always, always run RCP calculations for your clients. Even if you don't think that your client is going to be eligible for an offer in compromise, always calculate the reasonable collection potential so that you can know for sure, because under the new rules and some of the program changes that are reflected on the 433A or B OIC version that's in the new 656 booklet, run the RCP calculations using those new 433s in the 656 booklet. You might be surprised. You might have a client that's a borderline offer and compromise case where you might be able to do something to either affect income, expenses, or assets legitimately to make them an OIC candidate. Okay, so be on the lookout for that benefit for your clients. Probably the biggest thing, we're all going to need more patience when working with the IRS. You got to take into account, new roles that are being created within SBSE, the personnel shifts that are being done in SBSE right now. Like literally over the past 3 months, they're doing a massive personnel shifting situation. The shakeout of that, we won't really see the full effect of until after tax season. They're doing it right now on purpose because there's less interaction with SBSE during the filing season than there is later on in the summer. So be on the lookout for that. Account for that in your operational systems. You're going to have to increase your turnaround time. You're going to have to enforce deadlines with clients a little bit more aggressively. So you're going to need to take that into account operationally. So takeaway that I would encourage you here: take a look at your systems. Make sure you're always running RCP calculations on your clients, and educate yourself further on the mediation program. Fast track mediation is going to be a growing element of our business. So that's something for you to look at. I appreciate you taking the time to join me this morning. I hope that this was educational and informative, and I look forward to speaking with you again soon. Take care.